Hello everyone, my dear traders, Panda Trader is here, and today we're gonna continue to work and trade with my trading bot, which you can find in the description of this video. And now let's find our first currency pair, which is gonna be British pound to Canadian dollar. We are choosing 5-minute expiration time. My trading bot has indicated the 84% for buy, so we are buying. And in today's video, guys, we will talk about currency correlations and gradually move to the correlation between indices and currency pairs in the market. Stocks and indices are often used to predict the currency market, and in this world of speculators, everything is connected in some way. So the stock market is one of the most common topics of financial news, whether it's on TV or online. Stocks are up, stocks are down. For example, Apple stocks rose by 5%, and you might think, great, I love my iPhone, yeah? But there is a direct connection between stocks and currencies. For example, if you want to buy shares of a Japanese company on the Tokyo Stock Exchange, you can only do so in the local currency, so Japanese yen. So you will need to exchange your dollars or euros for yen, which increases demand for the currency. So the more shares are bought on the Tokyo Stock Exchange, the higher demand is for yen. On the other hand, when a currency is sold for any reason, its value drops. And when a country's stock market looks appealing to investors, they start pouring money into it. But if the stock market is doing poorly, investors pull out and look for better opportunities elsewhere. Binary options and forex traders don't buy stocks directly. However, the condition of the leading stock markets around the world should still matter to you. If one country's stock market performs better than another one, capital will flow from one country to the other, which affects their currency immediately. Where there is money, there is a stronger currency. Where the stock market is weak, the national currency weakens too. And a strong stock market means a strong currency. A weak stock market means a weak currency. In other words, there is often a direct link between the stock market and the exchange rate of a country's currency. For example, the yuan dropped after the Shanghai exchange crashed, and the easiest way to track the state of the stock market is to use a special index on the chart. It has a price, just like any other asset, and it's easy to watch. And now let's talk about correlation, pros and cons. The cons here are pretty obvious. Your risk can double if you open trades on two highly correlated pairs. Also, correlation regularly changes over different time frames, which you should keep in your mind. The pros are that correlation allows you to diversify risk, hedge your trades, and make use of leverage. Also, guys, you need to remember coefficients are calculated based on daily closing prices. The next one. A positive coefficient means two pairs move in the same direction. A negative coefficient means they move in opposite direction. And the closer the coefficient is to +1 or -1, the stronger the correlation. And now let's figure out if you should pay attention to these indices when working with currency pairs in forex or binary options. Of course you should. They help you understand overall market trends on higher time frames, for example. You can simply put when the stock market is going up, investors are more willing to invest into it, buying the national currency for that purpose. This naturally strengthens the currency. But if the stock market falls badly, investors pull their money out, converting it back to their own currency, which weakens the national currency. So, and now guys, it's a perfect time as our trend is going higher to announce you my $50 contest, which I'm making for you every video. So if you want to win $50 from Panda Trader, you just need to like this video and write me any comment you want. And now we closed our first deal of today with winning by my trading bot Signals, which you can find in the description of this video. Also, do not forget to join my free Telegram channel, guys. I'm giving there daily trading signals. And now our second deal is gonna be on the currency pair United States dollar to Japanese yen, and I have already opened my deal as my trading bot has indicated the probability of leaving full buy is 100%. So let's check it out and get back to our topic. Correlation can be seen as an additional indicator of global market trends. And if two related assets move in opposite direction, it's easy to identify the trends of each using technical analysis. And you already know what to do with trend lines. And now let's look at some popular correlations between commodities and currency pairs. And here I've got a few examples for you. First one is gold up, United States dollar down. So in economic crises, investors often buy gold with dollars because gold tends to hold its value. Second example is gold up and currency pair Australian dollar to United States dollar is going up. Australia is the third largest gold supplier in the world, so the Australian dollar's value is closely tied to gold demand. Next example is gold up and currency pair New Zealand dollar to United States dollar is going up as well. New Zealand also produces a good amount of gold, so its currency benefits from rising gold prices. Our next example is gold up and currency pair United States dollar to Canadian dollar going down. Canada is the fifth largest gold supplier, and when gold prices rise, the United States dollar to Canadian dollar currency pair often moves down because people buy Canadian dollar. The next example is when gold price goes up and the currency pair euro to United States dollar is going up as well. So both gold and the euro are seen as alternatives to the dollar. So when gold prices rise, euro to United States dollar pair often goes up as well. Next example is when the price of oil is going up, United States dollar to Canadian dollar pair going down. Canada is one of the biggest oil producers, exporting more than 2 million barrels a day, so mostly to the United States. And when oil prices rise, the currency pair United States dollar to Canadian dollar usually falls. Our next example is when the price of bond yields going up, national currency is going up as well. It's pretty much simple. The higher the yield on government bonds, the more people buy them with the national currency. As demand for the currency rises, so does its value. And the United States and Japanese economies are closely linked and tend to move together. Also, investors often see the yen as a safe haven during economic troubles. The stock market, which can be analyzed through indices, strongly correlate with currency pairs. By studying their interactions, you can often find situations where one set of data acts like a time machine for the other. It's very important not just to recognize correlation, but also to note when its direction changes from positive to negative and vice versa. And now one more example for you guys. Let's just say the correlation between currency pairs United States dollar to Japanese yen and United States dollar to Swiss franc has been 0.22 for the whole week. That's a very low correlation and not very reliable. But over a 3-month period, the correlation has risen to 0.52, then to 0.78 over 6 months, and finally to 0.74 for the year. So most importantly, don't forget guys to apply everything you've already learned and remember risk management. Then currency pair correlations can become a valuable tool in your trading arsenal. And most importantly, it will help you avoid mistakes when trading two pairs at the same time without realizing that you are doubling your risks if the selected pairs are fully correlated. And we closed our second deal in profit, 2 out of 2 today with my trading bot. You can try my trading bot by yourself. You will find the link under this video. Also, don't forget to join my free Telegram channel where I give daily profitable signals. Like this video and subscribe to my channel. All the best guys.